Hi Rocky Outcrop. This is the Ethereum video for today. It is Tuesday the 25th of February, and thank you so much for joining in. Thank you very much for liking and subscribing and any of that sort of tosh. So let's just roll the intro credits, it takes 5 seconds, and then look at the charts. Right, so up here behind me, hi again, up here behind me, you've got the 1 hour chart. Because I thought let's just start off. It's where I left off on the Bitcoin analysis I was doing earlier on the 1 hour chart. So let's just get in here on FOMO territory, shall we? And use 1 hour chart. And now let's bring up the current price as well. 256. Oh my god, 256. In fact, 256 is one of those prices, by the way, that over the last wee while I've said to people has been a good area to get into for longs. And if we're looking at the prices. Now, I'm not a financial advisor, none of this financial advice, but if we look across to the left here and see that, well then, oh my goodness, it was actually several times quite decent. I mean, you could have got in here easily enough on that time on the yesterday, and then taking profits over here, $10 up. I mean, that's, what is that? That's like 5% or 4% or something. That's like a decent move. Anyhow, here we are, and we're trying to do this. We're trying to be more. I want to try and be more FOMO-y about this, and more fiery and greedy about this. I want to try and be able to force my mindset into that, just to be relatable to people. But it's really, really difficult for me to do that. In fact. Because I'm just not that type of trader. I'm just not Mr. FOMO. But I really, really want to try and do that for you guys, because I know that out there in the world at the minute there'll be tons of real bearish sentiment kicking about the market, and we're just going through sideways action. You know, that's what this is. It's sideways action. It's what I've been saying for quite a while. So at the very start of this sideways action over here, we said, oh yeah, I'm sure you could probably draw in something like this at some point or whatever. And I still stand by what I was saying before, in that these are more or less fairly useless, these triangle type formations, because you can kind of see this for yourself. You know, when the prices came down here to the low 40s area, we were talking about how that was probably a decent entry for a long in order to take profit up here at the 270s level, you know, and we were doing that based off of the horizontals and based off of the trend and just general stuff anyway. But whatever. So you have this triangle that you could draw on here. Let's just stick it in there. That looks pretty good. Of course, you've got a couple of exceptions to the rule here with these wicks, but we're just going to we're just not going to get. Please forgive me. I'm trying to get into the FOMO of all of this. So let's do a blooming measured move using a drawing as well, just because I think this is also a bit ridiculous when you see people do this on the internet. But let's just do it anyway. And oh, look at this. Let's just say we break out around about here. That'd be about 75%, wouldn't it? Now let's say we break it around about here, and look at that. The price is going up to, behind my record icon. Oh, it's going up to, the prices are going up to $324 off the back of this measure move, folk. So yep, you want to be getting in your longs right now, right at this price right now. Or sorry, the other side of it is, because these are more or less 50-50 patterns. Or, oh my god, folks, you want to short this crap now. We're going all the way back down to 200. That's where that measure move takes us, all the way down to 200. In fact, let's just make it even more easy to do the FOMO stuff and just stick this up a little bit, or change the angle a little bit. Just change the angle a bit. That's what I'll do. So you see how subjective these things are. So just change the angle. Let's see if I can get away with it a little bit more to make it more FOMO-y for everybody. Okay, great. So look, we're breaking out of it right now. Look, we're breaking out of it right now. So if you haven't shorted already, there's something wrong with you. There isn't. This isn't financial advice. This is me doing satire for the opposite of financial advice, in fact. You can see, oh look, yeah, we've broken out of it now already, and we're going to $200. Look at the measured move. It's all there. It's all right in front of your silly faces. So anyway, obviously these triangles can be more or less handy, but they're 50-50 layout in terms of how they break out, really. And what would be, how would you know that they've broken out? Well, you'd be making it past critical areas of support, but you're inside a triangle. You could make it up past the supports and bounce back down. Yes, and you'd be doing it at the same time as making higher highs and higher lows and whatnot. So currently, what we're looking to do is to try and get up to this white line here, 279 or so, and actually open and close a decent enough size candle, you know, 4 hours and above. Not the 1 hour that I'm looking at now, in order to say, hey, look, we're up here, and we've broken out of this pattern you know, and by which stage, of course, you'd be looking at, you'd say, oh look here, we've broken out here, right? It all adds up to the same thing. It's just that what you find if you watch a lot of YouTube for your technical analysis is that people only grow their subscriber numbers really by being clickbaity and introducing that fear mentality onto their audience. Whether or not they have it themselves, I don't know. I mean, I don't know. I can tell you, but anyway. In terms of where is this a good area to be longing and shorting from? Well, in any of these formations, if you're actually trying to get in there and play the breakout or whatever, I mean, the most sensible thing to do is wait until after the breakout, which is what I just kind of identified up here. So if the prices were going up here and open and close above here, and we're actually managing to go on up, then you could say, hey, maybe we're going up here, and you could take longs there and manage your risk around that area, because then that would be a fake out, and you'd be able to assess it. You know, because if it's like, oh, it's broken out, and then oh, it was just a fake out, I've lost all my money. How does that happen? If you only started trading it at the breakout, then it turns into a fake out. You've lost nothing, you know. And likewise to the downside. But if you were to be doing it in here, then of course anywhere in amongst where you would draw your own little lines there will be fine. And like I said in all the previous videos, around 256 and whatnot, that's also fine. And you can manage your risk around this area. And then you can also you should be sensible and be taking profits in around this area too, because of course it could be a fake out, you know, and you could take profits there, you could wait and then you could see how it reacts around different areas, and you'd probably get some sort of correction, slight correction afterwards, you know, like it was Dow, the guy that's the Dow Jones is named after, that said in his theory that that things generally retrace 50% of the way. And of course, you can demonstrate these sorts of things to yourself by just drawing on Fibonacci retracements anywhere you like, which is what a lot of also these people that you're watching that introduce the FOMO into the market do, of course. And you could draw one in like that, for instance. Like there, and then you could be like, oh look, we've broken below the 236 here, we're clearly, you know, this is returned to, this is now an invalid Fibonacci retracement, and we're going to be making our way further on down. You could just say that, you know, if you wanted to, but it's pointless. So I don't know if I've been clear in this video. I think I have. I think I was really clear, but let me know in the comments down below. Thank you so much for tuning in. That's it for this video. I'm going to go on and do Tezos and Chainlink next, I think, and just let me know what you think about this in the comments down below. Thank you so much for tuning in. I really appreciate it. Appreciate all the likes and subscribes, and let's just see how things pan out over the next wee while. I hope I don't look too much of an idiot. If it were to actually break out right now and go all the way down to $200, I think I'd maybe look like an idiot at the end of it, but the underlying point would still remain valid, even though I'd look like an idiot. So thank you so much for tuning in, and everyone who subscribes, by the way, feels genuinely that feels like I've got a friend out there in the world, and that's really valuable to me. So thank you so much, and I'll see you in the next one.